In this 1-minute video, I'm going to be answering your questions on what a golden cross is. Simply put, a golden cross is when a shorter moving average crosses over a longer term moving average. Historically, what you'll see and what you'll hear is the 50-day moving average moving up through bottoms up, the 200-day simple moving average, and that is what's referred to as a golden cross. Now this will give you a theoretical buy signal, and you'll see this happening over and over again on multiple different time frames, and that is a signal to get long. Is it foolproof? Absolutely not, but it does suggest that there is a move that is about to happen. So some traders will see that there is a dip buying opportunity, there's a golden cross, they'll look at the previous high, and then they'll look to take a short-term swing trade into that level of resistance and sell. If that level of resistance breaks out, pulls back like it does here and holds, they will stay along with a portion of their position still on. So you can see that this golden cross and breakout to a prior high happens over and over again. Here's an example, here's an example, and then the flip side is what's referred to as a death cross, and in an upcoming video I'll talk about that. Now again, the golden cross is when a shorter moving average crosses up, bottoms up, through a longer term moving average. Now there are different settings that you can have with your moving averages. In the most traditional way, the golden cross that you hear a lot about publicly is when the 50 trades bottoms up through the 200-day simple moving average. I urge you that if you like this, I urge you to go and back test this on whatever chart you're looking at, multiple time frames, and I would start with the daily and have a look at how many times that golden cross is produced, and you will see that there is buy signal after buy signal after buy signal. Again, is it foolproof? Absolutely not. Do your homework.